From her groundbreaking predictions to her fearless approach to investing, Cathie Wood has captured the attention of investors worldwide. Today, we're diving headfirst into the world of Bitcoin price predictions for March. And who better to guide us through this maze of volatility than the one and only Cathie Wood? What lies ahead for the world's largest cryptocurrency asset in the coming weeks? Let's discover together as we peer through Cathie's perspective. Cathie Wood, the CEO of asset management firm Ark Invest, has been a vocal supporter of Bitcoin for more than 10 years. Since her company's initial investment of $100,000 in 2014, Cathie's confidence in Bitcoin has continued to strengthen, especially in the face of worsening global economic and geopolitical conditions. She highlights that during the regional bank crisis in March last year, Bitcoin experienced a notable 40% surge amid the turmoil in the regional bank index. And once again, the regional bank index is displaying signs of volatility, prompting renewed attention. Despite a minor correction following the introduction of 11 ETFs, Bitcoin is once again capturing interest from investors. This resurgence underscores the perception that Bitcoin serves as a safe haven or quality asset in times of uncertainty, reinforcing its value proposition in the current market landscape. And that's not all. She also perceives Bitcoin as a transformative catalyst, disrupting the traditional notion that gold is the ultimate safe haven asset. She points to the U.S. banking crisis of last year as a prime example, illustrating how it triggered widespread panic and compelled investors to rethink their investment strategies. Amidst the crisis in March and April 2023, Bitcoin skyrocketed from $20,000 to over $30,000 per coin, marking a staggering 50% increase, while gold saw a modest 11% uptick. That's an intriguing observation because it appears that not many people have taken notice of it. Cathie underscores a crucial precursor to the crisis: a steep decline in the regional bank index, plunging from over 60 to approximately 44 within a fortnight. As the Bank Term Funding Program approaches its conclusion, the index is once again exhibiting instability, currently hovering at its lowest point since November 30th, 2023. During the presentation of Ark Invest's Big Ideas 2024, Cathie hints that the looming crisis may present an even greater test for Bitcoin compared to 2023, especially considering investors' enhanced access to cryptocurrency assets via spot Bitcoin ETFs. Alongside her short-term optimism, Cathie maintains a bullish outlook on Bitcoin's long-term trajectory, viewing it as a fundamental component of the public blockchain, one of the 5 disruptive innovation platforms, poised to propel equity market capitalization from $19 trillion to over $200 trillion by 2030. This insightful analysis by Cathie Wood sheds light on the intricate dynamics shaping Bitcoin's role in the ever-evolving financial landscape, providing invaluable insights for investors navigating the volatile cryptocurrency market. What's more, she elaborates that upon analyzing the current market landscape, it becomes apparent that around $19 trillion of the total $117 trillion in global equity market capitalization is associated with disruptive innovation, comprising slightly over 15% of the total. If their assessment holds true, supported by Brett's expert guidance and the meticulous groundwork laid by their analysts, this $19 trillion is poised to soar to an astounding $220 trillion within the next 7 to 8 years, spanning a duration of 7 years. This translates to a remarkable 42% compound annual growth rate. In stark contrast to this substantial growth trajectory, the rest of the world seems to experience minimal to no appreciation in value, and the underlying reason behind this phenomenon lies in the principle of creative destruction. The conventional global order is on the brink of undergoing a profound metamorphosis, rendering traditional benchmarks like the S&P 500, MSCI World, and NASDAQ inadequate to keep up with the pace of transformation. The case of Tesla provides a valuable lesson in this regard. The S&P refrained from including Tesla in its index until the electric vehicle manufacturer achieved a market capitalization of $500 billion. This decision stemmed from criteria mandating a 4-quarter moving average of profitability, with the final quarter being profitable, an achievement Tesla attained around 2020 or 2021. Reflect on the significance of this milestone. How many companies exceed the $500 billion threshold? Interestingly, many investors who awaited the S&P's validation before entering the Tesla market are now facing financial losses. This scenario is typical in the realm of disruptive innovation, where controversies often arise, resulting in fluctuations in stock prices. Nonetheless, the speaker and their team exude considerable enthusiasm regarding these developments. As evidenced, they meticulously analyze these growth rates by major innovation platform, with robotics leading the charge. Notably, industrial robots, in particular, are commencing from an exceptionally low base. In contrast, AI's growth rate of 37% is calculated from a substantially larger base. To underscore the magnitude of these transformative shifts, consider their projection for the artificial intelligence market capitalization 5 years ago, which stood at approximately $40 billion. Today, that figure has surged exponentially to $400 billion. These points she's making are quite solid. How do you feel about them? Let me know in the comments section. Even more, Cathie expresses steadfast conviction in these 5 innovation platforms: artificial intelligence, blockchain technology, robotics, genomic sequencing, and energy storage. Here on the Incorruptible Money Education channel, we demystify the complex world of finance, providing reliable news and a comprehensive financial literacy to you. We guide you through the intricacies of managing money, investing wisely, and making informed financial decisions. So if your goal is to foster financial independence and confidence and navigate the economic landscape with clarity and foresight, then click the subscription button and turn on your notification bell to join this community of financial enthusiasts. She envisions the convergence and rapid expansion of these 5 innovations as a profound force reshaping the trajectory of the global economy. Reminiscent of the transformative impact witnessed with the advent of the telephone, electricity, and internal combustion engine in the early 1900s, albeit on a more monumental scale. While these earlier innovations catalyzed a 5-fold increase in real GDP growth, Cathie anticipates even more remarkable outcomes from these 5 platforms. Despite experts forecasting a decline in growth from the historical 3% average to a range of 2.6%, Cathie's extensive research suggests an astonishing growth rate of 88.5%. Even in the most conservative scenario, this surge would elevate the share of global equity market cap attributed to these platforms from $199 trillion to over $220 trillion within a span of 6 years. Additionally, Cathie foresees substantial ramifications for Bitcoin and Ethereum prices stemming from this unprecedented growth trajectory. Her long-term projections for both cryptocurrencies stand at $1.5 million and $28,000, respectively, underlining her profound confidence in their potential. This vision underscores her belief in the transformative power of innovation to shape the future of the global economy and financial markets. She further elaborates on the reason for Bitcoin's decline subsequent to the introduction of ETFs. Cathie attributes this trend to the significant pre-release buying frenzy surrounding Bitcoin and the ETFs driven by investors' anticipation of their launch. This phenomenon was followed by a noticeable trend of selling once the news was officially announced, showcasing a pattern of profit-taking among traders. Such trading behavior reflects a high degree of opportunism among investors seeking to capitalize on short-term market movements. Notably, out of the total 195 million Bitcoins in circulation, approximately 15 million are categorized as being held by strong hands having remained dormant for over 155 days. Data vividly illustrates Bitcoin's upward trajectory, particularly when juxtaposed with gold, highlighting its resilience and attractiveness as a store of value. This comparison underscores a notable shift towards Bitcoin, indicating a growing preference for the cryptocurrency over traditional assets perceived as safe havens. And with the emergence of a more streamlined and less cumbersome method for accessing Bitcoin through ETFs, this substitution trend is anticipated to endure, further solidifying Bitcoin's position as a favored investment choice in the ever-evolving financial landscape. And in terms of the broader economic outlook, Cathie's once buoyant optimism is now overshadowed by concerns. She apprehensively contemplates the possibility of the U.S. economy experiencing a more severe downturn than initially anticipated, potentially resulting in a pronounced recession, heightened rates of bankruptcy, increased job losses, and widespread financial strain for American households. Her apprehension is further fueled by the looming specter of another crisis within the regional banking sector. Recent indicators paint a bleak picture for regional banks in the United States, which collectively hold a staggering $2.7 trillion in commercial real estate loans, with approximately 80% of these loans being managed by smaller regional institutions considered not too big to fail. As a significant portion of this debt approaches maturity against a backdrop of elevated interest rates and deflated property valuations, regional banks are faced with formidable obstacles in recouping these loans. A poignant illustration of this predicament is evident in the recent financial performance of New York Community Bank Corporation. The company incurred a substantial $252 million loss in the last quarter, starkly contrasting with the $172 million profit recorded during the same period in 2022. Additionally, the company disclosed a staggering $552 million in loan losses, marking a significant escalation from the $62 million reported in the preceding quarter. With the situation teetering on the brink of crisis, there is a palpable risk that these challenges could precipitate another banking sector turmoil, amplifying the potential for immediate upward momentum in Bitcoin prices. This underscores the interconnectedness between traditional financial institutions and the cryptocurrency market, highlighting the potential ripple effects of banking sector instability on digital asset valuations. So, we delve into Cathie Wood's insightful predictions for Bitcoin prices in March. Now that you're equipped with Cathie Wood's latest Bitcoin price predictions, why not delve deeper into the realm of cryptocurrencies? Click on the next video to uncover the top 5 strongest cryptocurrency projects in 2024, where you'll gain invaluable insights into the future of digital assets and stay ahead of the curve in the ever-evolving world of finance. Stay informed and empowered as you navigate the dynamic landscape of cryptocurrency investments. See you in the next video.